Is this one of the most underappreciated roll-up series in Europe? HomeServe, a plumbing and HVAC company that quietly grew into 2 billion revenue powerhouse and was eventually taken private by Brookfield in a 6 billion deal. But this isn't just about boilers and leaky taps. HomeServe is a masterclass in evolution from local plumbing contractor to high margin insurance broker to disciplined HVAC acquirer. And at the center of the story is a strategic insight most people missed: how to turn service calls into recurring revenue. Joining me again, Alex Prokofjev, the co-founder of RollUp Europe, who's done a deep analysis of HomeServe playbook. Alex, first of all, thanks a lot for doing this. And to start with, why should anyone listening even care if they're not in plumbing business?
Yeah, absolutely. And it's always a pleasure to be on this podcast, Mick. Look, why should you listen to this podcast? I think number one, and you alluded to this in your intro, Mick, HomeServe is not a plumbing company. It's never been a plumbing company other than for the first couple of years of its existence. It is, in fact, a vertically integrated insurance broker that used M&A to deepen its distribution mode. And the brilliance of HomeServe is that they took one of the most reactive and scalable trades, very unglamorous, emergency home repair, and they turned it into a predictable, high-margin, prepaid risk product, right? So what HomeServe ended up doing is not selling fixes if you have a leak or if your gas boiler stops working. They sold peace of mind, and they did this by partnering very efficiently with utility partners to sell that product to millions of customers. And I think that's the type of playbook, that's the type of structural advantage you just don't see in most services roll-ups.
Can you give us a timeline and maybe the early days, how it all played out? Like what was the original business model and why it nearly failed, and how did that challenge lead to membership pivot?
Yeah, sure. So the business model failed not only once, but twice, almost. And how it started, we have to go back to the 1980s to the north of England, a business called Fast Fix, which was a predecessor to HomeServe. And it was essentially an old school plumbing service. A customer with a leak would call the plumbers, they would fix the leak ASAP, and then they wait to get paid, and sometimes not. And so obviously, as the business grew, so did the accounts receivable position, and it's a working capital nightmare. So the bigger your business is, the more money you're actually losing in terms of cash. Now, the pivot for HomeServe came when they realized that you should not get paid after the leak, after the fact that you fixed the leak, but you should get paid before this happens. And the way to do it is obviously to sell home emergency insurance. And that pivot from being a plumbing business to essentially a broken business had two key aspects. The first one, HomeServe did not take the underwriting risk. This is very important, right? So rather than set up an insurance company and gain new expertise and have a whole lot of capital, they partner up with insurance companies such as Aviva in the UK, acting as a broker, earning a commission and admin fees from the policies that somebody else underwrote for them. This is very important. So they had no exposure to eventual claims. And the second one, instead of approaching customers in a direct manner, so going door to door and saying, hey, why don't you buy this insurance policy, they partnered up with a bunch of water utilities. And that was a very smart go-to-market strategy because essentially they would approach a utility, offer them to buy books of business, and then pay the utility a commission on every policy that they wrote.
What can today's entrepreneurs learn from HomeServe ability to evolve, from reactive repairs to a prepaid membership model?
I think there are two key lessons, Mick. I think the first one is no idea is perfect. And that's what I keep telling myself in everything that I do is your first idea may not be a viable one. Your second idea may not be a viable one. Your even third idea could be not a viable one. But provided you're able to learn, iterate, and adapt your business model, eventually you'll figure out something that becomes very scalable and highly profitable. And HomeServe, which went from almost bankruptcy to twice to a $6 billion takeover, is a very good example of that. So that's lesson number one. And lesson number two is Fintech. If it's a services business, see if you can somehow embed a Fintech revenue stream, whether it's insourcing payments or in the case of HomeServe, selling insurance, or in some cases, if you're selling or distributing boilers, see if you can sell some lending, right? So Fintech is just that secret sauce that makes any services business model much stickier and much more profitable.
Fascinating. Now, when it comes to timing, we have done previous episodes about people buying kids' YouTube channels. You mentioned wineries. What about this story? How important was timing and timing in shaping HomeServe trajectory?
Yeah, definitely. So I think the timing was very good because if you look at the 1980s and early 1990s UK, this was a period of rapid economic transformation. You clearly had Thatcher in the government, and a lot of people actually were buying out their flats from the council. And so you just had this explosion in home ownership around the UK. And obviously, what's the first thing you want to do when you buy a home or take over a home? You want to make sure that it runs very smoothly. So all of a sudden, you had millions of people around the UK that became homeowners that finally, thanks to economic growth, had a bit of cash. And the first thing they want to do is buy a policy from HomeServe. So it came at a very appropriate time, and also UK at the time was at the forefront of financial innovation. So launching something like that today, when it's much easier to reach out to the customers, when maybe you don't need those utility partnerships, would have been much tougher versus 30 years ago.
Now, when it comes to their HVAC roll-up strategy and this buy and build playbook, why was HVAC such a powerful acquisition channel for HomeServe high-margin membership business?
Yeah, HVAC essentially gave HomeServe control over critical customer juncture. Trust is high and wallets are open. So every time you buy a gas boiler and have it installed, or you buy a heat pump, or you need to have them repaired, you just need it to be done, right? It's not a sort of a discretionary service that you can actually postpone a month or two. No, in the middle of the winter, your gas boiler just needs to work. And I think what HomeServe realized very quickly is that if you come in at the point where the gas boiler is installed, you tell the customer, hey, do you want an insurance against any breakdowns? So if something happens, we can be here within a couple of hours. And, what's the answer you're going to give? Absolutely. So it was a very easy sell to customers. Versus maybe, if the customer's already kind of kitted out, and it's a bit harder to convince of the actionability of the product.
Now, when it comes to acquisition multiples, how was HomeServe able to consistently pay higher multiples, 8 to 11 times EBIT, and still win in the market?
Yeah, the short answer is HomeServe wasn't just buying status quo earnings, which is how many other acquirers look at it. They were buying policy distribution. So the way to look at their effective multiple was much lower because essentially they were buying a business which was making money off the installation and maybe the maintenance. But on top of that, they were able to boost the earnings through the recurrent protection plan, which is the insurance broken money.
Hey, quick break from the episode to tell you about our next sponsor, Spacebar Studios. If you're running a portfolio company or working inside a private equity-backed business, you know how hard it is to build pipeline, shorten sales cycles, and improve win rates, all without bloating your team. That's where Spacebar Studios comes in. They act as a flexible growth team for B2B companies doing between 1 million and 50 million in revenue. They're handling everything from messaging and outbound to paid media. And the result? High ROI campaigns that actually move the needle. They've helped SaaS, compliance, and enterprise services businesses, both VC and PE backed, build serious demand and accelerate revenue. So, if you're ready to scale without hiring a small army, head over to spacebarstudios.co and check them out. That's spacebarstudios.co and check them out. Now, back to the show. And what made HomeServe focus on smaller acquisition, the size like 3 to 4 million on average? And how did that shape its execution model?
Yeah, so right now we're talking about the strategy less in the UK and more in continental Europe and the US. And maybe it's helpful to give our listeners a bit of a background. HomeServe started out with a strategy of buying customer books of the big energy and water utilities. And that's how it grew initially in the UK and then in the US. But obviously, there's only so many big utilities out there. And so at one point, it ran out of utilities also because it achieved significant market share and it started buying smaller HVAC businesses. Obviously, that push into HVAC in the US coincided with the push of search funds and private equity firms into the same space. And in order to distinguish itself against the competition and to win deals, HomeServe had to pay slightly higher multiples, which we just talked about, but also it had to focus on smaller deals. And what you find typically is that deals or targets with sub 5 million revenue don't tend to attract that much private equity interest. It's too small for private equity. They're interesting for searchers, but searchers are not able to pay the same multiples they HomeServe. So HomeServe figured out that sweet spot where the supply of targets was good enough and it could afford to pay multiples to still make a good a good economic profit, and it just doubled down in that segment.
Now, before we started recording, we discussed this a bit, and you asked me like, can I go a bit harder when it comes to your opinion on public market and all that? So the question is, why did public market investors give up on HomeServe despite its continuous growth in North America and Europe?
Yeah. I think it's actually a very sad story, because if you look at HomeServe, it's a business that, although it was very much incubated in the UK and headquartered in the UK, after a little while, it essentially became a US business. US is the largest market. It also established very successful franchises in France, Germany, and Spain. But regardless of the success in those other jurisdictions, the UK public market investors just continued to get hung up on various challenges that HomeServe had at home. And there have been a few challenges, absolutely. I think one of the challenges was that in the attempt to get more growth and to write more policies, HomeServe started doing things that the regulator, the Financial Conduct Authority, did not like necessarily. For example, leaving dropped calls to the customers that had churned from the policies, essentially forcing them to actually call back. And I think what's important to understand is if you cross the line from non-regulated business to regulated business, such as distribution of financial products, your mistakes tend to get penalized extremely hard. So I think that, plus the fact that they had bought so many utility books, there was no more ability to grow organically, stunted their growth potential in the UK. But again, why get hung up in the UK when there are so many things happening outside of the UK? And the second thing that happened was, again, there were a couple of points in time when the company missed its guidance, and it also had built up a portfolio of smaller businesses like plumber marketplaces that just weren't performing too well. That, I think, is overall an expression or a very good example of European investor kind of mentality, where things that are not going as well receive a huge weighting. So people tend to get focused on the lack of growth. They tend to get focused on maybe some regulatory issues. And I'm not saying those aren't important, but at the same time, you had this American juggernaut, which is doing so well. And Brookfield, the Canadian infra investor that ended up acquiring HomeServe, saw through the noise and realized that those were temporary issues, and it also saw that the future engine of HomeServe was going to be in the United States and not necessarily in the UK.
Brookfield saw the opportunity and went after it. What exactly have they done post-acquisition? Did you cover this on your research as well?
Yeah, absolutely. I really like what Brookfield has done post-acquisition. So it's done two big things. Number one, it separated the European business from the American business, which I think is a brilliant idea because the American business was a little bit hidden within the listed company. I think HomeServe should have done this itself, and maybe if it had, it would still be listed as an independent company. But essentially, American business now has a separate capital structure, has its separate bonds, has a slightly different investors. So it still has the same logo, but it's operationally separate from the rest of Europe. So that was number one. And number two, it just doubled down on HVAC acquisitions in Europe. And if you look at the recent deal announcements, I think in 2024, HomeServe did 6 HVAC acquisitions in Germany, did a number of acquisitions in France. It's been growing in Spain, essentially leveraging the same playbook that has worked really well in the UK and the US, but also taking advantage of the new trend in Europe, which is the shift to renewables, and in a way actually taking a playbook from another aggregator of installation companies, which is 1.5, essentially buying installers of heat pumps and solar panels and selling them the same type of protection plans that it's very good at selling elsewhere.
Now the lessons part. What's the biggest takeaway from this transformation from plumbing contractor to cash-rich insurance broker? We covered it a bit, but maybe there's something more.
Yeah. I think the biggest takeaway is that the original business idea may not be the business idea that makes you the most money. And as you go along, you have to adapt your playbook and to incorporate new sources of income. And in the case of HomeServe, if HomeServe did not provide emergency repairs, the customers would not buy the policies, right? Equally, if HomeServe, outsourced home emergency repairs to somebody else, I think it would be relatively easy to actually disrupt it because then, everything's outsourced, right? The insurance piece is outsourced, emergency repairs. But I think retaining the core competence, which is being able to come quickly when the customer calls, but accepting that this business would be run at break even and the money would be made elsewhere, namely from distribution of insurance premiums, was the winning formula that allowed it to expand very, very quickly across the different countries. And that's something that if you're an acquisition entrepreneur, you should always be open to, is that your original idea may change to a point where you don't recognize it.
Now, when it comes to changing ideas while buying businesses, growing businesses, how can smaller portfolio managers, roll-up operators apply those home service insights about, especially about this cross-sell flywheels, even without insurance products? Do you have any ideas?
I think we come back to the point where is your service mission critical and is it recurrent or not? Because in the case of HomeServe, people need repairs, but maybe they don't need repairs all the time. And I think taking a service which maybe is one-off and creating like a protection plan or creating some sort of a maintenance income for yourself and maintenance obligation for the customer is very key, because anything that is mission critical is recurring is always going to carry a higher multiple, and if it carries a higher multiple, then you're able to raise more capital. If you're able to raise more capital, you're able to go buy more businesses, and at some point you just get that escape velocity where you're able to pay a little bit more because you're valued at a premium multiple, and you're also able to muscle out other competitors for the same assets because people recognize you because you've bought other assets. But it all starts with has to be recurring.
Alex, I want to get into your brain because I know you've been thinking about this. So now the secrets part. What other verticals might be ripe for a similar strategy, combining service delivery with subscription or insurance-like models?
Yeah, it's a great question. There are so many ideas. I want to try them all, but I don't have the time, so I'm happy to share my secrets with your listeners. I've written down here a couple. I'll just go for them. Pet health. Pet health is amazing. So figuring out how to combine veterinary clinics with pet insurance is a tried and tested formula. I don't know why everyone is doing that. There's still a lot of opportunity. Appliance repairs. There's another company which I'd like to cover with you in the next couple of months. It's called Requrring. It's the biggest iPhone insurance business in America. It grew out of a search fund. And again, the idea is genius. At the point where the customer buys a new iPhone with or without a plan, sell them insurance. It doesn't cost them that much. It's the money upfront, and you just do it. Home security, that's another one, right? You obviously want to have recurrent income. So anything that has to do with it, so you need to bundle trust. So that the customer trusts that you will be there when the customer has an accident. So if the customer has a faulty phone, maybe you issue them a new phone, and maybe you do a very quick turnaround. Or same with the boilers. Recurrent coverage. Outsource the risk and own the distribution. So that's the winning formula.
Alex, I love it. For the next episode as well, I'm glad that you're not holding back, because this is the best part, because you're the one who's doing the research. You gather all those ideas, and you're doing it first and foremost because of the reason to learn yourself. So thanks a lot for sharing all the information and all the secrets of your own lessons. So thanks again, and see you in the next one.
Absolutely. It's my pleasure.